Good morning, everybody. Welcome to the Flow Show, Monday, the 20th of October. And you'll have to excuse me if I'm a bit still coffee and sputtery through the show. Just recovering from a bit of an illness from last week, but hopefully over the worst of it and ready to get stuck back into these bloody markets. Morning, Kay. Good weekend?
Hey, morning, Ryan. Yeah, it was okay, mate. Thanks. Hope you're on the path of recovery and everything will be back to normal soon, yeah?
Yeah, I hope so. Bit of a nightmare back at home. We had the first night last night where no one was coughing up all night from keeping everyone else awake. So first full night's sleep had in a few days. So yeah, recovered from that most definitely. And yeah, hopefully that will continue. Right, let's get stuck into things. First off, we've got a sale on our TFP accounts. 30% off all plans. You need to use that code SPOOKY30 to take advantage of that. And I'll pop a code up in the chat function in a second. So that lasts until the 2nd of November, midnight. So get in quick. These sales don't last long. So if you want to get involved in that, go to, excuse me, I told you, go to Trader Funding Program and input that code there. And there's the linky dink in the chat there. Use code SPOOKY30, and that's off all plans, every single plan we have. So get involved in that. Right, let's get cracking into the rest of it. And we're going to start off over in good old China because there was a ton of data out overnight. Oh, if I've got my calendar ready, there we go. Where am I going here? Not even in the right days. Look at that. There we go. Still can't find it. There we go. So, ton of data out of China. Firstly, they kept their LPR rates unchanged, 3% and 3.5%. So they're not ready to move on rates yet. The data overall, there's been a lot out. The most important was GDP data. That's for Q3. That beat expectations of 0.8 quarter on quarter to come in at 1.1, but the year on year number fell to 4.8 from 5.2%. That takes it below the magic 5% level, although the China's target for this year was around 5%. So we're still in that ballpark. But it's a bit of a knock from that 5.2% and well down on the 5.4 that they came into the year with. So that may up the odds for potential rate cuts coming in Q4, which have been touted by various state sources. Maybe they'll want to see what happens at the Trump-Xi meeting. Other data was okay. Retail sales came in year on year 3%, beating expectations. But a bit lower than last month's 3.4%. The unemployment rate also improved to 5.2%, so that was pretty good. Industrial production, that was looking all right as well. But there was some bad news for fixed asset investment coming in minus 0.5% on the year, and also their housing market still remains in a bit of a slump as well. House prices still in the negative, down 2.2%. Throwing all that in with the CPI data we got the other week in the negative as well. As I say, it's possible that we get some rate cuts out of China at some point. A spokesperson at the National Bureau of Statistics over there had a bit of a moan up, said that from Q3, the economic slowdown attributed to external structural factors, and moaned about the what they called, or what he called, if I can find the actual quote, I can find it. No, I can't. Yes, I can. He said that the tariff abuse by certain countries has disrupted the order of global trade. I'll give you one guess as to who he's pointing at with that line. So they're not very happy with what's going on, but playing the blame game for that data anyway. All right, moving on from them, we go over to Japan. and the LDP and Ishin have formally signed a coalition agreement. They're horse trading still on what they're going to agree on in terms of policy, talking about sales taxes and all the rest, and financial funding, which has been a bit party financial funding, which has been a bit of a sticky point as well. One thing that has come to the fore is that the LDP are going to apparently have made some concessions to reach an agreement on reducing the number of Diet members. So that's actual members in Parliament possibly by around some 50 seats, which has got all the other parties up in arms because of proportional representation. When that rule was put in place, they managed to get some seats and stuff. So it looks like they're going to try and cut the amount of members in Parliament, which would obviously help whoever's ruling the government at the time. Kay, is this something that's going to feature heavily in the session to come?
It was one of the Ishin points, Ishin Okay points. Yeah, it would be interesting because that would, as you say, make it a lot easier to get a majority. And in their case, I suppose that how the votes have went, that would drag them over the line. Because now with the coalition, they will be falling 2 seats short of having a majority. But again, as I said last week as well, they will be able to find those seats thanks to some of the independents who are either ex-LDP or either I don't know what it was before Ishin, but they will find those extra votes if needed. But there are a few points of contention there. One is those reduction in seats. Of course, if you have a non-conclusive majority, that you can have it easier. So the opposition will not like it, but there's also still a little bit going on about population strategy and some reforms on visas and things like that, which may. I'm not saying, because now they signed the coalition, obviously. I'm not saying LDP will give in to everything of it, but which are the points. When you look at the points at Ishin's demand, none of them are exactly pro. How shall I say? Not very positive points. I mean, a lot of it is reduction in stuff. So, not sure whether it's really positive yet. To me, it's a coalition that is going to be a bit bizarre, because some of it is also not stroking with what the LDP wanted to do. So yeah, I don't know. We're going into a bit of a bizarre coalition there, in my opinion.
Yeah, it's going to be a bit of watch this space. And the reaction to the news that happened Sunday night, it was a bit of delayed. When markets opened, we had this news that this coalition was close, and Dolly M pretty much opened unchanged. I thought, oh, that's a bit of a surprise. Maybe that's it. We all priced up, and then it all shot up when further comments came out later on.
But it was kind of done from let's say Thursday night into Friday. It was kind of done. Because then Tabaki had another moan up. There was one other party who was not going to vote against it, so it was kind of done. Yeah, maybe the higher Dorian that we then saw is just on the back of the equity markets opening in Japan. We know that the yen is kind of very close to what's happening on their equity markets, the Nikkei and the Topics, and both then after the opening rallying, that's probably where the rally in dollar yen and yen crosses came from before what's his name, Takata opened his mouth.
Yeah, exactly. So we're into what next mode as far as politics is concerned. We'll get over this Diet session business, see what comes of that, and then maybe we'll get some decent insight into policies that are potentially going to come. And yes, we had the other hawk who voted for a hike at the last meeting popping his head above the parapet. Said now is a prime opportunity to raise the policy rate, and that the price target, the BOJ's price target, is more or less achieved. And so we need to adjust monetary easing further. So sounds like these two hawks are potentially going to be on the cards for a hike vote again at the October meeting coming at the end of the month. Reuters also dropping a bit of a sources piece saying that the BOJ might slightly revise up their economic growth forecast for the rest of fiscal 2025 at their October meeting. We are probably, well, we'll be 8-9 days away, or end of October, so we are now in sources mode, I would say, for the BOJ. So keep your eyes and ears open, particularly during the Asia time zone. Was there anything? Have we had anything last week, mate?
On the BOJ,
Yeah, any sources.
well, no sources. Just Ueda and Uchida were babbling away that bit is usual. Yeah, if everything goes according to plan, we're going to continue to hike, but we have to be careful about the plan. So and Uchida was sort of in the same mood. Yeah,
Yeah,
but the thing is, again, I mean, Bank of Japan raising the outlook for growth, which is all well, but is it really going to have a lot of impact? What was interesting though, and then moving a little bit away from the Bank of Japan, is that over the past weeks, and of course it's all due to that political jockeying and the LDP, Takahashi, etc., is that we have seen a pretty big decline in the interest rate differentials between Japan and the US, which have not had an impact on the yen. So maybe, just maybe, we will have to wait and see what Takaichi is really going to put on the table. But if she, by any chance or by any risk, I would say for yen shorts in particular, then would say that they may not go all gangbusters on the budget. We may all of a sudden maybe see a bit of a catch up. It's an interesting. It has been going on for weeks, and I would still say it's still going to continue for a while, that we are going to ignore those interest rate differentials. But the closer we get to getting a real idea about what she will do, the closer we will need to monitor all of it, because all of a sudden we could see a catch up on those interest rate differentials. It's been an interesting thing going on.
Yeah, so I expect that we should going to get some swings in yen pairs as we get political news and BOJ news, and then everything else that's going on in the world as well. Right, let's move on to New Zealand. We had some CPI data out from those guys, Q3. These are the main numbers up here, but the main one that the RBNZ follow is what's called the sectoral factor model of core inflation, which came in unchanged at 2.7%. But otherwise, in these numbers, inflation had risen up a bit as well. A bit of price data out of Germany. 2 PPI data coming in, continuing to come in the negative, down 0.1% on the month and down 1.7% year on year. Price pressures abating there more and more. Bank of England, Hugh Peel says he votes to maintain rates, or his vote to maintain rates is a skip rather than a halt, and that we need to recognise CPI stubbornness is more pressing. BOE's Green taking a pretty hawkish stance, saying core inflation and services inflation are moving sideways. There's signs that the disinflation process is slowing, has concerns about second round effects, and the wage part of the wage price spiral is now less likely. It says policy is not meaningfully restrictive. and we should slow down the cutting cycle, although the rate cutting cycle is not over. There's big data coming for the UK this week as well. ECB Simkus says, I like the idea of a risk management cut. It says you can manage the risks, and in my view, they're to the downside. It says the next ECB forecast for 2028 CPI will be important for the decision in December. And says if they are more than marginally below the target, we should act on that. So it's a little bit of a dovish split from Simkus there to the majority, the other ECB members who think that the policy is in a happy place. That goes for Dutch central banker ECB's Slijpen. Says policy is in a good place, but it doesn't mean it will stay put. ECB's Nagel says there's no need to act on interest rates. ECB's Wunsch says receding chances that further rate cuts will be needed, but downside surprises could increase the chance of a rate cut. Lagarde was out. She's sticking to the scripts. Risks to growth are more balanced. It says the range of inflation risk has narrowed, and the outlook for inflation remains uncertain. It's not going too well over in France. They may have found a modicum of political stability, but that didn't stop S&P from cutting their ratings on Friday night. Their ratings now lowered to A+/A-1 from AA-/A-1+ something or other. That you work that one out. They say that's on the heightened risks to budgetary consolidation. They kept the outlook stable. France's security rating may need to be cut too, because the Louvre got robbed yesterday in apparently 7 minutes. They nicked some crown jewels, climbing up a not a cherry picker, but an extendable ladder from a van, busted through a window. 7 minutes. They got out and were run off with some jewels. So not going well in France at the moment. We're still lacking any real data from the US, but the Atlanta Fed GDP now for Q3 came in up at 3.9% from 3.8%. So showing those numbers at least showing that the economy is ticking along nicely. Fed's Muslim says we could support the path with another rate cut if more risks to jobs emerge. Says inflation is contained, but the consumer facing firms are facing more trouble passing through tariffs. We could see a negative payroll prints, but unemployment may not move. Bank of Canada's Macklem says he sees soft Canadian labour market despite the jobs gain in September. It says we expect growth to resume, but it will be soft and probably a little below potential growth. President Trump has been waffling on about China as per usual, waffling on about everything as usual. He said, or he was asked last week if high China tariffs will stay in place. He said no. He said such high tariffs on Chinese goods are not sustainable. He says we are doing very well on trade negotiations with China, and he's back on the old soybean purchases bandwagon as well. Economic advisor Hassett says if the shutdown continues after this weekend, we can expect Trump to ramp up actions. Well, the shutdown does remain after this weekend, so we'll see what those actions are. He also said that on Chinese trade, that rare earths, and talking about rare earths, says he doesn't think they're really going to do it with regard to these export curbs. Says China has a little bit of leverage right now, but it would hurt them more. Maybe you didn't see the news that was out about China's shipments of rare earth magnets. They fell 6.1 in September from August. There was a fall of 7.5% versus the same period last year. Shipments to the US fell by 28.7% in September, month on month. So maybe those curbs already in place, as has been touted previously. Russian news as well. Trump says that he will be talking with Zelensky about a Putin call. Says things are coming along pretty well, and that he hopes we can end the war without tomahawks, and thinks we are pretty close to that. So we're playing that game again, where we might be getting led up the garden path towards peace. We'll wait and see how that all turns out. That's about it. I've managed to pluck from the airwaves. Kate, anything else?
Now you covered everything. Although Trump and Zelensky actually already spoke, and it wasn't a great meeting once more, because Trump basically told Zelensky to accept what Russia wanted, or they may be destroyed. And then afterwards he came back a little bit on his words. Yeah, I think there's been a good few promises made between Trump and Putin again. But yeah, it's still not completely done yet. But yeah, as Fred said, there was some shouting over the meeting as well. I don't know if Vance was there, otherwise it wouldn't have remained at shouting, but they would really have been fighting. But no, it's Trump is playing that game again, trying to put more pressure on Zelensky. But Zelensky already said that he to talk about peace, they would need to freeze current battle lines, which in itself is actually quite interesting, because that would potentially mean that what Russia has conquered up to now, that they may be come onto it may come onto the table, and they may finally give in something. But yeah, I mean, it's all still very much open. It's not even sure whether Putin is going to get free airspace to land in Budapest and from the European Union. And actually, by the way, I think um, Ukraine's adherence to the EU is on the table for December as well.
Yeah, yeah, that's back. That's
It's
back on the
going.
thing.
It's going to be some end of year, I think, on that side.
Yep. Well, something better wake up the end of the year. But yeah, it's going to be a busy one. No doubt about that. Right, let's look at what's coming up this week. Probably the biggest event is that we've got US CPI coming on Friday. This is the data that's being released, September CPI data. This is all due to annual revisions to social security programs over in the US that use this data to make those adjustments to next year's payments to retirees and other benefit holders. So we're getting that on Friday. As far as I'm aware, the data was all pretty much compiled, so it should be whole. And it won't have any missing bits and pieces, but we should just be prepared in case it's just bit part data, annual, monthly numbers, rather than all the usual bits and pieces that we get with it. But anyway, we should be getting that data on Friday. In the meantime, today we get the Bank of Canada's Business Outlook Survey. Keep an eye on that. That can be a bit of a market mover. There's a sort of index that runs alongside that, as well as comments from businesses and whatnot. Tomorrow we get some public sector finances from the UK for what they're worth these days, because that's yet another data point that's up in the air. We also get Canadian CPI data as well. Keep an eye on that. Tomorrow we get UK CPI data, and inflation is still looking very, very sticky in the UK. So that's going to be watched. That comes alongside PPI data as well. On Thursday, we get Canadian retail sales. Obviously no US data from that lot as well. So that's going to be a bit of a quiet one. On Friday, we get some CPI data out of Japan and UK retail sales, which could be a bit interesting to see if sales have fallen off a cliff for the month of September after having a pretty strong summer. I'm still in the camp that it could drop off, but I was out and about. I was out and about when Mrs. was out and about on Saturday down the shops, and she said it was absolutely ramo out there. So who knows? Maybe a bit of a drop in September and a bit of a pickup in October. So we'll see what those retail sales. Those will be September numbers, and I am expecting that to pull back a bit. And then we kick off with the PMIs, which will start Thursday night, I think, in Australia, Japan, and then we'll get everything else coming through from the Europe and the US. We will get the S&P flash numbers coming up there, and then we'll follow up in a week or so's time with the ISMs and whatnot into the end of the month. Next month, this will be the Michigan final number for October coming out of that. Oh, I don't know why I've clicked that, but anyway, so that's the calendar for that point this week. So not too busy on the data front, is it, for some choice numbers? Anything in that lot you're looking forward to, Kay?
Well, I guess the market is going to be focusing on the data that we do get out of the US. So I guess that that puts the emphasis on the Friday, right, for the CPI. Always interesting, the UK data. The closer we get to Reeves' budget. Okay, we have Bank of England in between as well. Yeah, I think the UK data are always something. The closer, as I said, the closer we get to UK Reeves' budget, data in the UK are going to increase in importance as well, because the market will use them as a potential positioning moment to get into the budget.
Yeah, absolutely. I'm not expecting anything of note for the Bank of England in the CPI data, except for it to maybe still stay sticky. But I think those retail sales could at least be something that we get a comment out the government on, because they obviously keep an eye on the consumer.
Now, don't forget we live in a wealthy corner of the UK. In our neck of the woods, the retail sales will always be good.
Yeah, well, particularly after all the summer folks have buggered off as well. So yeah, we'll wait and see. We'll wait and see. Right, let's have a look at what's been going on in the world. Not even in the right bits. Let's hop over here. So dollar yen, we had a little bit, bit of up and downy going on. And this one, I really don't know what's going on at the moment. I think, as I say, we're gonna see some two-way action. I think at the moment this one, I would side with the balance being that we might see a bit more weakness than we see strength. But as I say, it's going to probably come in waves with risk and whatever. Kay, what was the reason that we saw that sharpish move on Friday?
Oh, risk. First of all, it was that happened mainly in Asia and Thursday night, right? Thursday night risk got absolutely hammered, and in the US because there was that how shall I say that thing on the repo market, and then some regional banks and the banking stocks got hammered and everything got hammered, and then Asia. In the Asian time zone, everything went a little bit ballistic, but then we saw the recovery starting on Friday. So all of a sudden, yen got back for let's say 24, 36 hours. Yen got back on the risk train because commodities came off, yields came off. US 10s went below 4%. Commodities were dropping, and usually that's all. Energy was dropping as well, and usually that's all pretty good for the yen. And all of a sudden, the yen players recalled that the yen is also somewhere a risk currency, and that was the reason why we had that drop in the dollar yen as well. But then gradually, the thing started to recover. And also, I think the news that Ishin and LDP got confirmed that only had like kind of the confirmation impact. What we saw today as well. Okay, we had the Nikkei rally dragging dollar yen higher, and then now the stuff about revising GDP higher than the drag lower. But yeah, I think it's going to be more of a yo-yo than rather picking a direction. Although I'm maybe looking at it from the opposite angle that you are looking at right now. I think that the politics will in the end get the upper hand, unless unless something really bizarre happens on risk, obviously.
Yeah, no, I'm the same way as you. I think it's more likely we see yen weakness than we do
Oh,
strength.
okay. I thought you said weakness in the yen pair. Sorry, mate.
No, sorry, in the yen, yeah, I think we
Okay,
might have
okay, okay.
switched a little bit back that way now that the politics is back on the front table and we're in. But
Mm,
yeah, I think like I agree with you. It's going to be a bit of a yo-yo. We're going to swing between the risk headlines and the BOJ and whatever. But we'll see what the price wants to do. We got up into the 151s, couldn't stay there. We're back below this 150.80s level and holding this morning. The dips are bought up pretty quickly, though. There was one this morning as well that got bought up pretty quickly. So, yeah, maybe we've put in a bit of a bottom with this move, but we are still in a bit of a downtrend since those 153 highs. So that needs monitoring as well. But any move down, any of these levels, even 140, 150 and a half, 150, 1520, any of these levels towards this low holds on any dips, then that's going to look like we've got a bit of a bottom in play. And then maybe we start pushing back up again. 151, 30, 40 is probably the closest bigger level above that need to keep an eye on above there. And we're probably going to go for a little mooch towards that 152 level. Ali, I notice you are, what are you doing in dollar CAD? Let's have a quick look at that one. So this one was having a little nosy on Friday underneath this level here, this 140, 15, 20, 25, whatever you want to call it. We didn't last long. We couldn't really get down that close to the one test of 140. We're back above now. We are knocking our head just on this little intermediate level at 140.30s. We've had a bit of price action along there. We couldn't get through for quite some time. So if we can't get through there, then there's every chance we're going to go at least have another look at 140 again. Ali, you've got your stop at 139.78 effectively. Just keep an eye on that level, mate, because it is a big old point that we broke above and held right after. It's quite a historical level as well. It goes back quite some time. Can't see it unless you zoom in, but if you look through along there, it was a big level that I highlighted on the way up, and we had a little poke and then dipped back from it. So you've got your stop right on that level. So you may want to look at your own charts and think about that as well, because if it is a big level, you don't want to find it get pinged on your stop and then you see it bounce from that point. I'm still long a little bit of this one, but it needs to get back over this 140.30s to go and then try and do something with these prior highs, get back up towards that 60s area and maybe up towards 141. It's still looking good. The trend's still looking good. Still looking fairly constructive, but it is looking like it's slowing up a bit. But we had that here as well, and then we got another big move. Obviously, USMCA and all that stuff in the frame as well for that. So caution is needed to see what happens with that lot. Euro sterling, that's not doing an awful lot. Even while I was off, come back and it still looks like the same old picture. We've got this yo-yo again between 86, 50s, 60s and this 86, 20 area, which is still being a very tough nut. There's no real reason fundamentally why there should be any big moves here, things going on between the UK and Europe. But with that UK data coming this week, that could be the catalyst for a bit of a move out of the range. But be careful if you see these data moves, okay? They need to hold. So if we get a break one way or another, look for confirmation if you're thinking about running with that move, because you could just get a bit of an extension like this, a move up to these highs and then it falls back again, or a move down to 86, 20, 30, and then we go back into the box again. So if you do see any moves over the data, they need to hold. Okay, otherwise it's just a bit of an extension. We go back in the box. Kay, I think talking about our fiscal trade here, I think the market's got this one pretty sewn up at the moment.
Yeah, and I think there's some strong range players in the frame, mate. I mean, every time you come above that 87, 20, 25, it's offered. Every time you come down to 70, 60s, it's bid. That hints to me that there are people big with big enough pockets to keep it in the range right now. Why not? You know, somebody trading options around 87, 86, 90 or so, which and they don't let it go 20, 30 points outside of that where they have their strike or so. That's what it looks to me. And we kind of find it back in euro dollar as well, if you want. We keep coming back to that 116, 50, 60, and if you look back, even as far as July, it's been trading. It's been like kind of a level where the market comes to rest on, and then from early September, it's even getting more and more clear that this 150, this 116, 50, 60 looks to be the level of equilibrium, and it looks as you can compare it to the I don't know 86, 90, 87, the figure in the euro sterling. Those things. Um, I'm starting to wonder if it's not a euro thing, you know, rather than on the sterling on the one side and the dollar on the other side. It's not like people wondering what do we do with the euro. I mean, and in doubt, just range trade the whole thing.
Yeah, no, I think you're probably right. It's probably a mix of the both. There's enough going on with Europe and the US and
Mm,
in the dollar, and there's enough going on with sterling and the euro as well. So it's
mm.
probably a mix of all. But yeah, I mean, you know, if you're talking just the euro side, we're at that point. If the ECB are happy where rates are, they're not looking to do anything. Um, the data doesn't support them doing anything.
No.
So yeah, it's a range players
Mm.
trade really.
And in the meantime, you get downgrades. Germany is not getting off the mat, but the Germans are always hopeful, and we've had it again last week. End of last week, there was some hopium coming that investment will ramp up towards the end of this year and into next year. So there's enough hopium to keep it from falling out of bed probably this euro as well.
Yeah. Then on the other side, you got the crazy orange one to keep the dollar entertained. So yeah,
Yeah.
you can see why the options traders would probably like to keep this one contained for a bit.
Yeah.
Right, I'm going to punch it over to you, mate. There we go.
Okay, yeah, got it. I think we need to look at those metals, right? It's been as I was saying at the end of last week, it's starting to get a bit volatile, starting to get a bit bizarre. And I'm on silver here. We had this violent setback. It's one of those where okay, there's been two things happening as we know. Those who were in the market, there was this Trump saying that they are going to negotiate. They want to not to keep those tariffs high indefinitely, making plans for G, etc. And all of a sudden the metals lost their beat. Silver always a bit more violent maybe than gold, but I'm still seeing those articles, and especially now it seems that in India there's no supply anymore, and people are crying for more. So I'd still be a bit cautious to say that we are starting a reversal. Obviously, every time we lose that much in the metals, and it all started with platinum, as we saw in our in the room also mentioned, which lost 4% really fast on Friday morning, and then that dragged all the rest in its wake. Yeah, silver lost its mojo there on Friday, but then we still first of all, in this channel that we started to build up about a month ago, but I would also argue we are still above this big 50 line, 49.80, 50 line, and to really start reversing in anything, we will need to get below that zone. I've always been saying it, and also if we look at here. we had this move down the first time, low 50s, then the second time, and on Friday we dropped like a stone, but we did not get down to the real levels to test. Yes, we this channel, and we could say a bit of a fakey breaky, and now we're back bit, but I would really say that this is going to be the big level in silver. So that's the one that we keep monitoring, and for as long as we're above, you can see those kind of moves. But it's we will need to see. If we would get any positive headlines on resumption of talks, or maybe just maybe the situation in Ukraine getting closer to some kind of truce or a deal. I think the hedge that we people had in metals is likely going to drop away from for a while. So this could then break below, but before we see that, we have to be very careful. On gold, pretty much the same thing. We did break quickly below this 42.15 there, which is the short term. This is the first bit of correction, the last correction that we saw here early October, and then on Friday we had this big correction. Equity markets back up, yeah, Trump, etc., etc. Bit of recovery on the risk markets, and gold then all of a sudden lost its mojo as well. But there, and the trend line, maybe not. I'm going to remove this. But there is a bigger trend line coming in here, waiting if ever, and that comes back from end of August. That's a bigger one waiting here, and the level I'd argue would be like 40.60, somewhere down to 40.40. It's your some may say it's 41 already, but I would rather say here, this is your 50 in silver. For as long as we are not below there, I wouldn't start to call for reversals, okay? Because it's also double high here, a bit of a bit of a top here as well, and then we continue to shoot. So really 40.60 or so is going to be the real level. So as long as we're not below there, there's still a chance that we find. I wouldn't actually rule out another little look down there, but already around 41.60, 41.80, we have to look at what's happening on the day. But don't think it's going to reverse for as long as it doesn't break below this one here. Okay, so I'd rather. I would love to see actually this dip unfold and then see what's happening there. But it may be that we are already stopping in this 41.60, 41.80 zone. Okay, if we start to get back above 42.80, 42.85, it may just have been another correction, and we are going to gradually climb higher again. Just looking at the clock, mate, I think we've done enough for today. Just this thing here, which really was that Euro Swiss is everybody's watching it, whether it is Euro Swiss, Swiss yen, whatever. It is a pretty big level, yeah. August low in 2024, November low 2024, April low 2025. This low 92s in Euro Swiss. It's still a very big level. If we get below, the next one could be looking closer to 90. We don't really know what the S&B wants to do, but I still think, as I said on Friday as well, with everything that's going on, with all that gold that's been bought, etc., we know that in first half of this year, the central banks have incrementally been increasing their positions in Swiss franc. I My best guess is that they're still on it, and the S&B, if they come in, they will just sit on the bit to support. They will not come in and ram this thing higher, call a full stop to it. So just be a bit careful. It may just over the course of the week, if we see a bit more weakness in risk, also it may just get retested this zone and actually go for a walk below. There's just one that is on a lot of people's mind here. Back over to you, mate.
Thank you very much, mate. Good stuff as always. And yep, let's get you set up for the week. So thanks for coming to the Flow Show, as you always do. Hope you have a great week, and we'll see you all tomorrow.